start with a just brief review of the financial results for the quarter as well as for the year. The results of Q4FY21 and audited financial results for 21 are already with you for some time now, and we are sure that you would have already gone through them. Here are some of the key indicators from the financial results of Q4FY21 and FY20. The consolidated financial FY21 consolidated financial results of for the FY21. First, we said it should be for the fourth quarter FY21. We compare to performance of Q4 FY21 with that of Q4 FY20 and Q3 FY21 have been given in the presentation already circulated. Gross income in Q4 FY21 is 1,116 crores as compared to rupees 944 crores in the previous quarter, Q3 FY21, an increase by rupees 172 crores at 18.22%. Compared to Q4 FY20, gross income rupees 1,446. There is a marginal increase of rupees 70 crores at 6.69%. The PBT is 93 crores in Q4 FY21 as compared to rupees 108 crores in Q3 FY21, a decrease by 13.89%. Compared to Q4 FY20, PBT of 126 crores, there is a decrease by 26.19%. Decrease in PBT year-on-year basis is on account of increase in raw material prices and marketing expenses in Q4 FY21. Now coming to the annual results for FY21, the gross income for FY21 is 4,193 crores as compared to 4,186 crores in FY20, with a marginal increase by about 7 crores. PBT in FY21 is rupees 510 crores as compared to rupees 484 crores in FY20, an increase of rupees 26 crores. The PBT percentage increased to 12.16% on gross income from 11.56% of the previous period, mainly due to better sales realization. Increase in sale prices is a result of increase in sales price. In shrimp feed division, in feed prices, the PAT in FY21 is rupees 397 crores as compared to 386 crores in FY20, registering an increase of about 11 crores. The PAT increased to 9.47% from 9.22% on gross income. Now we come to the standalone financial results of feed and processing divisions. Now I'll take up feed division first. First we discuss about Q4 FY21 results. The gross income for the Q4 FY21 is 900 crores as compared to 778 crores in the corresponding quarter of Q4 FY20, registering an increase of 120 crores at 15.68%. The PBT for the Q4 FY21 is rupees 91 crores as compared to rupees 96 crores in Q4 FY20, a decrease of rupees 5 crores. Annual results for FY21. The gross income for the financial year is 3,307 crores as compared to rupees 3,223 crores in the corresponding year, registering a growth of 84 crores at 2.61%. The PBT for the FY21 increased to rupees 404 crores as compared to 376 crores in the financial year 20, with an increase of rupees 28 crores at 7.45%. PAT in FY21 increased to 305 crores when compared with 286 crores in FY20, an increase of 19 crores at 6.64%. Basically, the increase, we try to analyze the reasons for the reduction in the margins. Increase in raw material is one of the major contributing factors for profitability of the feed division, is as you know very well. Fish meal, soybean meal, wheat flour are the major raw materials consumed in production of feed, and fish oil and soya lecithin are their related products used in the production. The prices of soybean meal and soya lecithin are steeply increasing over the past 1 year. The price of soybean meal went up to 47 per kg in Q4 FY21 as compared to 43.30 in Q4 FY20. Fish meal went up to 93.05 in Q4FY21 as compared to 90 rupees in Q4FY20. Now the prices of soybean meal are 77.50 and fish meal is about 103. Exorbitantly high prices of these two products definitely contribute to the margins on the feed. Now what we have done is the increase in the shrimp feed is one of the measures that we have taken. That is, shrimp feed price has been increased in January 20 by 3.80 rupees per kg, which could absorb a raw material cost increase to some extent. Thereafter, another price increase of rupees 5 per kg was made in two tranches in Q1FY22. That is the first quarter now, from April to June. This increase has absorbed further increase of raw material cost to some extent. However, the prices of soybean meal and fish meal are increasing unabatedly. As you know, the frequent price increase cannot be resorted to, primarily in the interest of the farmers, and also for the reason that the government controls are there, so that whenever we think of increase, the government would immediately step in. Having said that, the company is hoping that RM prices would stabilize at present level for the time being, as the new crop of soya is expected to come in October 21. So we hope that when the fresh crop comes in October, maybe the prices, but we cannot say certainly. We have to see so many aspects here. Hope that there will be some to some extent the prices may come down. Similarly, fish meal prices also expected to stabilize once the fishing ban is lifted in West Coast and the fish catches increase from early August 21. See, one of the reasons for increase in the soybean meal is the exports. The exports, because the American and Brazil soya crop failed, so there was good demand for exports from India, and that has really made there is a shortage in India, the soya for local consumption, and that has actually made the prices to go up. Then the second aspect which we found is the increase in marketing expenses, which has gone up. The company had to spend some additional amount on marketing expenses during Q4FY21 as sales promotion and retention of the existing Avanti farmers compared to Q4FY20. The competitors resorted to huge discounts on feed prices to increase their sales, as there was general decrease in consumption of feed. Further, imported shrimp feed was available at much cheaper price than Indian feeds, as the import of feed had a concessional duty of 5% against the normal duty of 25%. In order to retain the farmers shifting to other feeds and to encourage the new farmers to go for Avanti feed, the company spent a one-time incentive of 17.25 crores, which yielded really considerable results, and we could retain all our farmers intact and in fact we added some farmers to our account. Now coming to the shrimp processing division, Q4FY20 results. The gross income for the Q4FY20 is rupees 218 crores as compared to rupees 273 crores in Q4FY20, registering a degrowth by 55 crores at 20.15%. The PBT for the Q4FY20 is 1.48 crores as compared to rupees 29.95 crores in Q4FY, decrease of 28.47 crores. The analysis shows that the impact of withdrawal of MES is one of the major reasons for the decrease in the profits. The gross income normally includes incentives of 5% MES and 3% duty drawback on FOB value of exports, which were contributing significantly to the PBT of the company. However, the Government of India withdrew MES in two phases. Firstly, restricting the MES incentive from September 20 to December 20 to 2 crores for 4 months total. And from January 21 onwards, it was completely withdrawn. On account of withdrawal of MES incentive, there is a reduction in the income by about 14.58 crores, And in addition, the 12.11 crores was taken as MES incentive in its company's financial statements on accrual basis. However, since there is an uncertainty of receiving this MEIS incentive from the government, the company reversed the income receivable in the financial statements of Q4FY21. We try to analyze some of the reasons for decrease in the margin. One is steep increase in ocean freight. There was an unabated steep increase in ocean freight starting from October 20, particularly from January 21. The average container freight went from $3,300 to $500 during Q4 21, which continued even now, which is about $7,100 per container. The volume of exports during Q5 21 compared to Q4 FY20 decreased on account of shortage of container availability. The RM cost also increased in Q4 FY21 compared to Q4 FY20. The annual results of the processing division for the financial year 21. The gross income during the FY21 is 888 crores from rupees 966 crores in FY20, decreased by 78 crores at 8.07%. The PBT FY21 is 108 crores as compared to what is the same figure, 100 crores in FY, almost equal to the previous year. Had MEIS incentive was continued, the PBT for the full year FY20 would have increased by 19.47 crores. The PAT in FY21 is 95 crores when compared to 100 crores in FY20, a decrease of rupees 5 crores. The following are the main contributing factors for the decrease in gross income profit, even though there is a marginal increase in PBT during FY21 compared to FY20. One is, of course, withdrawal of MES export incentive of 5% on FOB by the government. The second is the increase in ocean freight. The third, which is because of the accounting standards, decrease in export volume and corresponding value due to accounting procedure of containers shipped out. As per the Indian accounting standard, the containers on high seas, that is in transit or what you call on water, are taken as stock in transit at cost value. The profits on these shipments are taken into account into quarterly financial are not taken into quarterly financial results of the quarter in which they have been shipped. Such containers are at the end of Q4 21 were 105 with sales value of 114 crores, whereas at the end of corresponding quarter of the previous year, Q4 20, it was 84 containers with a sales value of 90 crores. In this particular, the profits on these containers will be reflected in the following quarter. Industry overview and future outlook. The world has suffered the impact of the first wave, and the effect of second wave appears to have receded to a great extent now, and the economies of countries limping back to normalcy. But the threat of its third wave, COVID-19, is looming large, and the countries are getting ready to face it to prevent major impact. After the first wave and before serious impact of second wave started, most of the global economies, including India, have succeeded in recovering to a great extent, and during the phase of second wave also, the economic activity was not disturbed much, though India had higher number of positive cases and fatalities. The industrial growth also picked up in almost all the sectors except maybe industries like tourism, hospitality, etc. The demand for the products, services picked up fast, supporting the manufacturing sector. The seafood industry is no exception to this. The restaurants, food services, etc. got back to normalcy with increase in demand for seafood products, including processed shrimps. The first season of the shrimp culture in India started in January, February with a lot of positive developments such as good climatic conditions, remunerative farm gate prices, availability of good quality seed, etc. During the first half of 2021, the shrimp culture has been very good and expected to continue during the second half also. The demand for the product is also likely to increase in second half due to occasions like Thanksgiving Day, Easter, Christmas, New Year, Chinese New Year, etc. Therefore, the future of the industry looks promising. Coming to the shrimp production and feed consumption in 2021. Shrimp feed consumption. The shrimp feed consumption in India declined to about 9.55 lakhs tons in 2020 compared to 12 lakh tons in 2019, down by 20% due to impact of COVID-19. However, as the demand for shrimp is expected to increase in 2021 due to return of normalcy and favorable shrimp culture conditions, the shrimp feed consumption is expected to grow by about 10 to 15% over the previous year, with an estimated consumption of shrimp feed around 11 lakh tons. The company feed sales during 2021 was about 4.55 lakhs metric tons and expected to be around 5.25 lakhs metric tons in 2021, an increase by about 15%. The company is expected to maintain its market share of 48 to 50% on an average. So now I just would like to give about the recall of some of the containers of the shrimp shipped by Avanti Frozen Foods recently. The company has informed the stock exchanges and made a corporate announcement on occurrence of an unexpected incident resulting in US FDA advising Avanti Frozen to recall voluntarily as an abundant caution some of the cooked products suspected to have contamination by presence of salmonella. This was done on the basis of reported sickness in 6 cases by CDS, US FDA due to salmonella contamination in the product consumed. As per the preliminary internal survey, which is yet to be authenticated, most of the products under recall would have been sold and consumed by now, with no report of sickness so far, except the above 6 cases related to this particular consignment. The company has product liability insurance coverage, which is adequate to meet the claims pending. The company has also initiated action to engage services of a well-reputed and recognized consultants and advisors, experts in food safety, public health, and regulatory requirements and compliances to further strengthen the company's systems and procedures to avoid recurrence of such instances in future. Since the volume of the product for this connected with this incident is insignificant, the company does not foresee any impact on the image of the company. Shrimp processing and export. The shrimp production and exports from India in 2020 was 5.75 lakhs metric tons as against the original estimate of 6.50 lakh metric tons, a decline by 12.5%. During the current year, 2021, the production and exports of shrimps is estimated around 6.5 lakh metric tons, a growth of about 10 to 15% over the previous year. The company's shrimp exports in 2020 is about 12,192 metric tons. The estimated export in 2021 is about 12,700 metric tons, maintaining almost the same level as in 2020. As the global markets are gradually recovering from the impact of COVID-19 and the economies are improving, the demand for shrimp consumption is also expected to pick up as customers turn out in restaurants, malls, and public eating places is increasing. Policies of the government and impact on the industry. In line with the policy announced by the Government of India, allocating about 10,900 crores to Ministry of Food Processing Industries in 2020, spanning over 5 years, the Ministry of Food Processing has announced a production-linked incentive scheme on incremental exports of seafood products over 6 years, commencing from 21-22. The PLI envisages an incentive of 6% for normal products and 10% for value-added products on incremental sales for 6 years with a condition tagged to it that eligibility depends on minimum investment of 75 crores on capex during first 2 years and achievement of 5% minimum CAGR on sales. The company has made an application under this scheme and awaiting response. In the place of discontinued MES export incentives, the government had announced to introduce RODTEP, remission of duty and taxes on export products. However, the details of the schemes are yet to be announced. So with this, I would like to conclude the positive note that the aquaculture industry is poised for a promising growth in 2021. Now we will take up the questions from the investors. Okay, Mamita.
Yes, sir. Thank you, sir.
Okay.
Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Participants are requested to restrict their questions to 2 per person during the initial rounds. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our first question from Mr. Ajay Thakur from Equentis Capital. Please go ahead, sir.
Hello, sir. Thanks for taking my questions. I had this question about, you mentioned about the new schemes, which is the dates of that is not available. However, any idea on what kind of a rate will that be? And once that new scheme is being implemented, will it be implemented retrospectively or will it be, prospectively implemented? So any idea on that front will be helpful.
PLI.
This is regarding PLI?
I'm talking about that Rodler scheme which has been announced.
RODTEP? RODTEP, I think what the government has said was it will be applicable from January.
Okay.
January 2021.
So it will be retrospectively, but
Yes.
the details on that front is still awaited, right?
Nothing is available as yet. Nothing is available. The government has not come out with yet. They are saying next week. We have to wait for next week.
Okay. And then you had mentioned about that there's been reversal of MEIS benefit recognized in Q1 and Q2, which was kind of reversed, amounting to rupees 12 crores in your presentation. So this reversal is likely to be so that reversed amount, we haven't. If I were to assume that, then we wouldn't have benefited on the scheme for FY21, or so there's some confusion on that front. Or we have benefited, but some part of that benefit is being reversed.
So the scheme was available when we accounted it, but we have not received the money, nor is the government giving any clarity. So we have reversed this income.
Because the government never gave any clarity on that. But we have followed the practice which we were doing earlier. So on the same lines we provided. But later on, when they restricted it to 2 crores for the the September to December, 4 months they restricted only to 2 crores and completely withdrew from 1st January. Then we thought that whatever the claims that were made were kept on hold. They were not releasing it, and they were not allowing even to upload the claims. That was the situation. So, in consultation with our auditors, and we have discussed, and we decided to reverse these provisions made earlier.
We thought as and when it is received, we'll account it for, because we are not sure when the government would release it. So we had to reverse it.
As and when it
till April, it was smooth. The things were going on smooth with their site, and we are getting the scripts. But from April, the government stopped everything. So they said that it will be cleared. So since we have taken the provisions for the first 2 quarters, so we had to reverse it.
Okay. So this for the September to December, you have accounted for the same as well, you're saying, which is 2 crores each for the September to December month.
No.
Also be reversed?
No. We have not accounted for it.
Okay, you haven't accounted for that. So in effect, we haven't factored any export scheme benefit for FY21 in that context, right?
Yes, you are right.
Okay, thanks. And lastly, just wanted to check on this Salmonella alert FDA. So was there any, because of things, would we have some kind of a impact on the business in Q4, and any likelihood of that having implication for FY22? And what are the steps that we are taking in terms of preventing this kind of occurrences?
So this impact is already seen. So if you see, the volume has reduced in Q4 21. So from February, since we received the notification, the shipments were slowed down on one product range. But this is a process. We are working with the FDA and submitting all the information, and this will be reviewed, and we will get a response from FDA going forward.
I may add to what Mr. Niklesh said, that whatever that impact that so far has been, only that. Beyond that, we did not receive much response, and as I mentioned to you earlier, the products have also been almost sold because they belong to the almost in the January-February consignment. So distribution said, so it will not be much impact is there. But however, we are taking all care to completely get our facilities audited by experts on this in public health and regulatory requirements, so that we do not such a things will do not recur. That is number one. Number two, since the consignment which has been found to be having this kind of a thing is very, very small and negligible, and most of our customers overseas understand what our standards. This has, in the past 25 years, we never had such kind of instance. So we almost all the customers know our track record, and they have all understood, and they are all cooperating, and we do not foresee any impact on account of this particular incident on our image of the company nor our experts. It is only a little slow down because we want to have a double check on our quality control measures and see that the more care is taken and systems are put in place so that things will not happen again. That's all. Other than that, there's nothing which will really have a long-term impact or on the image of the company or the products.
Okay, understandable. Thanks. That's quite helpful.
Thank you, sir. So our next question comes from Mr. P. Narayana from BNP Paribas Mutual Fund. Please go ahead, sir.
Yeah, hi. Thanks a lot, sir. So first is on the inventory and revenue recognition policy. The inventory movement as far as between last year and this year, between standalone and consolidated, kind of suggests there is reasonable amount of inventory increase. So on revenue recognition, just wanted to understand, when do you recognize revenue for the processing business? Do you recognize it when it leaves the goes to the port here, or do you recognize it when it reaches the US or whichever country the material goes?
Yes, we recognize the sales only when it reaches the destination. So the warehouse, yeah, there's a warehouse. So we show on the end of the quarter or end of the year as stock in transit. That is the accounting standard that we take on the cost value. So it does not, though the sales have been, the shipments have been affected on the basis of the sale price, and on the basis of the sale price, and practically they are all sold goods only. The only thing is that accounting standard requires that only those consignments which have reached the warehouse of the customer only, then it has to be recognized. Till that time, it is only treated as a stock in transit. On high seas or on the transit, it has to be treated as a stock in transit. So what happens is, say if the opening and closing transit value is the same, it does not affect your revenues, the top line. If it is if the closing stock is then higher, the inventory which is a stock in transit which is shown, so to that extent the revenue really come down, and profit also it does not reflect in that particular quarter, but it reflects in the following quarter.
Sure. No, the question was actually in relation to the, because the volume in the processing business is actually lower. But when we look at trade data for India, the exports from India has been pretty good. and March US data is also kind of suggesting the same. So that's why, how much of did you have any impact on your volumes because of the congestion at the US ports this time around?
See, there are a couple of issues really for that quarter. One was that, as I told you, generally there was a container availability, there was some sort of stress. So the shortage of containers were there in that particular quarter, the Q4. And the second thing is that because the quality issues, the FDA, so we took more time to streamline our processes and all. At that particular point of time, we slowed down our exports. So so we want to have more checks on all the qualities before we dispatch. That is one of the reasons why the volumes have come down. Because our order book is full. We have got full orders, but the only thing is, because of these reasons, we have little slowed down our exports during that quarter.
Okay. Second was with regards to the the PLI this thing itself. Our current capacities itself are underutilized. So from a PLI perspective, do you see so much of demand kind of coming up and for you to kind of put up that capacity? And if at all, when are you looking to put up the capacity, this year or next year?
So if you look at the PLI scheme, it is structured in such a way that the next 6 years, the CAGR of 5% is required. That is what the basic the requirement that to get eligibility for the PLI. So what it says is what we have structured in such a way that in the first 2 years we keep the investments on the other condition is 75 crores, which is to go for capex. What we have planned is that in the first 2 years we will invest on that, because we are working on certain expansion plans, in the sense that new products and new markets, we are working on that. So these 2 years, what we will do is we'll focus on this strengthening improving the capacity utilization of the existing system, and meanwhile the investment on the new capex is taken care of in the 2 years, and then in the process we'll increase our sales, exports. In the next 4 years, the residual 4 years, we have accelerated. See, we have projected an accelerated CAGR, so that at the end of this, the average CAGR remains at the 5%, which is the condition of the PLI. So we expect that after 2 years, they will be able to make the full utilization of the additional capacities also.
Sure, sir. Third is with regards to the capital allocation. Roughly about 70%, 65 to 70% of our net worth is in cash. So in the earlier quarters, you mentioned that in the annual results you will kind of consider with regards to possibly how to distribute the whether to look at capex or whether to look at returning money to shareholders. Given the it will also be earnings accretive if you actually consider doing a buyback. So what did the board think of this, and if you can throw some light on some of this aspect?
Yeah. See, the first thing is that we have been, the board, the management has been very seriously considering to start 2 things. One is to increase the capacity of shrimp feed itself, and also to increase bring in fish feed into the market, high quality fish feed. And also we have now that PLI scheme, not only PLI, we had some plan to expand those activities also. So these are the capex that we are looking for. And of course, the thing is, the question of buyback has been considered a couple of times in at the board level, but still we consider that we need to wait for some, and we need funds. If you raise the funds we require for our capex in the long term, instead of completely raising the funds at this point of time in these conditions or market condition, it is very tough. So we thought that it is not time for looking at the buyback of the shares. That was the a couple of occasions the decision was taken by the board, but yet the issue has been kept open, and issues is kept open, and then when the occasion arises, we be able to take a decision on that. But as far as the present condition, we still are confident that we'll be able to invest in some capex these funds. And moreover, the other important thing which we would like to share with you is that the working capital limits, whatever the working capital, see, if you look at the investment returns, the projects which we are considering and how much return is we are getting on that, we feel that still it is worth doing for going for working capital utilization, a portion of this, the reserves that we have. So still, whatever that is left out, which can be considered as a long-term investment, that we are under consideration of the board, that we will take. But definitely we will take that. Now, depending upon the opportune time, we will, as our PMD also earlier told, that with these, some projects are on the offing, and because of this COVID-19, not able to really implement them, we'll come with those projects as and when the conditions improve.
Sure. So one small request: whenever there is one-offs like changes in accounting policy in terms of recognition of reversal of MEIS or things of that sort, if you can put it in the result notes itself, that will be very helpful. And second, in the results, you kind of mentioned that for the directors listing achievements, you've mentioned that shrimp feed market share is over 50%, but in the presentation you've called out as 45 to 48%. If you can give better color as to what is our market share and what is the in the two businesses, that will also help. Thank you.
See, I'll tell you. See, the 50% is, in fact, we achieved. It is not like that every day it changes. It is consistent with 50% from the first day to last day. It keeps going up and down. So when we present to you on an occasion like this, we give you an average percentage of 48 to 50%. It does not mean that we have reduced our share of market. It does not mean. If you look at that, when the total consumption of feed has reduced, but in fact we have increased. That is itself is an indicator that definitely the market share should have gone up. Is it not? So if you just look at the numbers that we have given, our feed sales has gone up. When the industry feed consumption has come down, we have increased our feed. It means that definitely the share has gone up, market share. So,
sure, sir. Appreciate it. Sure.
Okay, thank you.
Thank you, sir.
Thank you, sir. The next question comes from Ashwini Agarwal from Ashmore Investment Management India. Please go ahead, sir.
Good afternoon, sir. Sir, this salmonella problem, this is the first time I believe that it's happening at Avanti Feeds. Have you been able to do a root cause analysis as to why this arose? Is it, something that got contaminated in the raw shrimp that you purchased, or some other reason? I joined a little late, so if you already commented on it, I apologize for asking to repeat that answer.
Good afternoon, sir. So the root cause analysis, a detailed investigation was conducted within the company, and the root cause analysis and corrective action reports were already generated earlier this month. The report was completed and submitted. We are also continuing to engage senior experts. This question was different. This question was different. Did you find the root cause?
Yeah. Hello?
So we did complete the root cause and submitted the report. So we are also continuing to put a high level of monitoring on all critical control points in the factory. So till now, since the incident has occurred, several shipments have been checked thoroughly within the factory, both internally, and we've also given out to private labs, and everything has come out clean. So we look at it as an isolated event, but however, we continue to do high level of monitoring within the facility.
I may add to what Niklesh said. See, particularly you know that the country was under severe COVID impact. The people coming and going, shift analysis, there could have been some one or two slippages here and there. It would have.
Actually, this salmonella occurs from transmission from a human also. Like somebody is, say, maybe during that period somebody was not hygienic or something. It may happen. But as per the thing, we have thoroughly checked the facilities and everything, and it has been everything was clear and clean. But we don't know, maybe what we the RCA, what we foresee, say maybe during the peak COVID time, the workers were coming in and we were checking them, and maybe somewhere it has slipped.
Hygiene.
Personal hygiene.
Sir, as far as the response that you submitted to USFDA, can you share with us what root cause that you identified?
Pardon me?
So at this moment, we cannot disclose the root cause because it is still under evaluation, because the report is not closed yet. But definitely, when everything is closed, the case is closed, we can then disclose.
So one more question I had on the industry outlook. I mean, you mentioned that the overall feed consumption has declined. So is there a potential supply problem looming ahead in the coming quarters or years? Because ostensibly, if shrimp feed demand has fallen, then the output of raw shrimp would go down as well. Is that something you're anticipating?
Mr. Agarwal, the actual this thing was last year, because of the COVID year, there was a disruption in the entire supply chain, and also because of the COVID. See, the brood stock was not arrived from the brood stock supply from the foreign countries, and the farmers also, because of lockdowns and all, they could not stock the seed in time, and the situation was arranged like that. See, now it has come back to the normal. See, we cannot compare the last year when we had a lockdown of almost 3 to 4 months, where people were not allowed to move and things were not moving in, and the farmers could not stock, and the hatcheries could not operate, and the factories were also running at lower capacities. So this is the situation. What has come down? The culture has come down. Automatically, the supply was less for the seed. Culture has come down, and the demand was less. Now again, things are becoming normal, and it is improved. I hope you got.
So your outlook from an outlook perspective, you're saying that things are slowly coming back to normal. Is that fair? Okay. All right. Okay. All the best. Thanks, sir.
Thank you, sir. Participants are requested to limit their questions to 2 per person during the initial round. The next question comes from Mr. Puneet Mittal from Global Core Capital. Please go ahead, sir.
Hi, thank you so much for the opportunity. I have 2 questions. The first is you notified the change.
Your voice is not clear, sir.
Mr. Mittal?
Hi, can you hear me now?
Yes.
Yeah, so you notified to the investors and the exchanges regarding the salmonella case and the USFDA notification. But you also mentioned that the Q4 results, the volumes were down for the shrimp processing business because of this issue. So it looks like the issue happened in Q4. So if you can just give us a timeline when that issue happened and when it was closed and whether things are back to normal right now.
So the first notification was given in February. So since then, we have taken several preventive measures and corrective actions, done a root cause analysis. So we did slow down the production. The reason being, we wanted to double check. We got product tested by an external lab before shipment. So we did reduce the volumes to be more careful, put in a tier-based system, so as we go forward, increase volume. So since then, we have been complying and working with the FDA, and we are working with them. Apart from that, that is not only the reason for the reduction in volume. There was a significant shortage in the availability of containers. As you are aware that the number of cases also started going higher from February, March. So we had a lower footfall of workers. So there were multiple reasons why the volume has reduced.
Okay, so just to confirm, is that incident closed and now our processing business and shipping is back to normal, except naturally for the container issue, which still is persisting, I guess?
The major problem for the volume down was the shortage of containers. See, we were backlogged on the containers because the shipping lines could not supply the containers, and the shipping space was not there in the vessels, and there was in Colombo there was a congestion on the transit ports. There was we could not ship out in time the vessel, the containers. And that's the main reason. And second thing, as you said, we have also slowed down because to find out what was the reason for the salmonella issue. So all this together, the volume has come down. The major was because of shortage of containers.
Okay, understood. My second question, which I think has been raised by an earlier participant, and is regarding capital allocation. And from the explanation that you have given us now and historically, the company is naturally conservative to preserve the cash so that it can use the cash for CapEx and working capital and expansion, or even to make sure that there's enough cushion when things for a rainy day, basically, and you don't want to go for debt. But the company is generating really decent cash flows. So this year has been free cash flow of 300 crores. So at the end of the day, that cash flow and going forward, if you are positive about the business, should be enough to really take care of your capex and working capital. So should we understand that the company doesn't want to do buybacks because the company thinks that the valuation of the company is not undervalued?
See, as earlier we have been saying, we have a capex which we have to put in for the expansions and all the things which have been delayed because of the COVID. And second thing, with the requirement of working capital is also high. Once we expand the requirement, we are also running short in our requirement, demand. So the company has a lot of demand, and there is a capex requirement. And second thing, when we see the possibility, we look into it.
Okay.
Yeah.
Okay, just one straightforward question. Do you think that the company is valued fairly at the moment?
We didn't get you.
Do you think the company is valued fairly at the moment? Do you think the company is valued? Is it undervalued, or is it valued fairly at the moment from what the market is valuing the company?
So this is a conversation I had very recently. It's a very personal opinion. Right now, to build a company with this much exposure in the aquaculture segment, the feed mills, hatcheries, farms, processing facilities, customer base within India and abroad, I think Personally, it's not, with the current value, you wouldn't be able to build such a company. It is definitely, there's so much more inherent value and strength within the company.
Thank you so much for your honest answer, and really appreciate your time, and all the very best. Thank you so much.
Thank you, sir. The next question comes from Mr. Sundar S. from Spark Capital. Please go ahead, sir.
Hello, sir. Thanks for the opportunity. The first question is with regards to the marketing expenses that you had mentioned in your opening comments. So this you had based it on the import feed prices being lower, but I thought import feed prices, custom duty was increased this particular budget. So what is the situation there? And the question number, just on the same point, is that you also mentioned about the restrictions that were placed by the Andhra Pradesh government. So should we assume that we've already hit the upper limit in terms of pricing for the feeds itself per se?
The pricing depends on the raw materials and all these things. We work out on the pricing. I didn't understand your question. Please, can you repeat it again?
No, sir. In the earlier comment, you had mentioned that this time we had incurred higher marketing expenses because the imported feed prices were lower and competitors reduced the prices. But I thought imported feed prices increased after custom duty in this budget was increased from 5 to 15 on imported feeds. Logically, the imported feed prices should have been higher this time, right? So I didn't get the connection there.
Yes, what you said was right. The imported feed, the duties were
At that time, 25%.
Yeah. Huh?
Customs duty was 25%. Well, on several, See, in fact, the customs duty on this product was normal duty is 25%, but the government had given a concessional duty of 5% on them. So a lot of imports were coming in, and they were also announcing a lot of discount schemes. With the result, they were much cheaper than Indian feeds. So several representations were made to the government, and at last only in the last budget they revised this thing to increase it to 16%, 15.5% they've increased. So till that time the prices were very, very low, and because in some sort of apprehension that they may lose market, many of the other competitor feed manufacturers started giving a lot of discounts to their feed. Already there was an impact of this, the feed consumption had come down, and moreover with this everybody, almost all feed manufacturers started giving a lot of discounts. So the question was first thing was to retain our own farmers, customers, and also attract the new farmers to maintain our growth rate and to our feed sales. This is a challenge before us. So one of the options that we had was to introduce a scheme, a one-time scheme, by which we issued coupons to them, and these coupons were again allowed to be redeemed for purchase of feed itself. So we have fixed a scale. So if so many tons of feed is purchased, we give so much amount of coupons, like 10,000, 20,000, 30,000 coupons we give, and these coupons are utilized for redeeming the feed again. So that was the advantage we gained by this scheme, and with the result we have been able to maintain our customers intact, and moreover we have added new customers also. The scheme was well accepted, and we had a result of the scheme also under the very, very tough conditions in those days. And then of course the government conceded to our request, and we wanted it in fact to bring down to normal rate of 25%, but they said that no, we will put it at 15%, so they increased to 15%. This is the background of that additional expenditure on the marketing expenses.
Right, so thank you for that. And my second question out here is that, last year was a bad year because of lockdown and the other events that we had. And this year also you've indicated that the season has commenced on a weaker note. So 2 years of washouts, so should we take this, or is it a structural trend that farmers will move out after 2 years of bad crop, or how are you really seeing the impact on ground sort of 2 years of no big crop coming through into the market from a farmer's perspective?
So I see, I think in my introductory remarks, I said that this year the culture has really improved and there is a lot of, positive response from the farmers. The growth is good, climatic conditions are good quality of seed and everything, the farm gate prices are good, everything is good, very encouraging to the farmers and they have started right from January end and February and they are doing well. All the growth is good, everything is good. But we never said that this year is going to be bad year. This is a good year which we anticipate. And I think Simdi will add to.
Actually, this year the first crop is very good. I can say the first crop is very good compared to the previous year and all of the 2019. I'll take the calendar year. The first crop of this year is quite good, and the farmers were because last year they could not stock their farm. Put the seed because of the availability of the seed and because of various as I told earlier, the broodstock has to come in from Hawaii or Florida. The flights were not there and hatcheries could not operate in full scale and the farmers could not get the seed. So last year many people could not stock in time and they could not do it. But this year first crop it was very good and the harvestings are going on and the second crop is also looks quite good. Now it depends on the climate conditions and the monsoons and all these things. This is the situation. The more number of farmers have come into this and expansion has also taken place in the agriculture, like Orissa and Gujarat, Orissa and West Bengal. There is an expansion of agriculture. Many people are coming into agriculture than leaving agriculture.
Right. So just a clarification is that they mentioned earlier that seed consumption had declined. So I presume this is referring to last year and not this year.
Last year.
Okay. Okay, sir. Thank you. Thanks for the clarification.
Last year.
All the best, sir. Sure, sir. Thank you, sir. All the best.
Thank you, sir. Ladies and gentlemen, due to time constraint, that was the last question. Now I would like to hand over the floor to Mr. Sherwin Fernandez for closing comments.
Thank you, Momita. On behalf of KFinTech, we thank the entire team of Avanti team for allowing us to host the call. And we also appreciate the interest from the investors and the analysts for their participation. Thank you and good day.
Thank you, sir. Ladies and gentlemen, with this we conclude our conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a good evening, everyone.
Thank you.
Thank you, sir.
Your conference is no longer being recorded. No longer muted.